Inauguration day brings in all-time highs in the stock market. You're watching the Daily Stock Market Brief. My name is Michael Silva. Just some quick housekeeping before we get into the show. Today I'm going to be talking a little bit slower because I've been talking really fast and losing my breath. And some people have been leaving comments regarding it. They're like, dang man, slow down, you talk too quick. I'm trying to press all this information in a short video between 20 minutes and 30 minutes, which is really long for YouTube. But, you know, I try my best. So I'm going to just slow it down a little bit. And if you don't want to hear certain sections, I'm going to put timestamps in the description below so you can just go to each area that you want to hear me talk about or see. So this is kind of how I'm breaking it up. It's going to be indices, and then we're going to be going into some indicators, commodities, the dollar, and then I'm going to wrap it up with my conclusion. Kind of just where my thoughts are right now on the market. Let's go ahead now and get right into the show. All right, welcome back. What's up? Oh yeah, let's go. All-time highs across the board. It's been crazy, crazy, crazy price action, and we broke out of some key levels, which we're going to be talking about. The gainer today was Nasdaq 100, huge gap ups across the board, really, and we're going to get into that. And then you can see the VIX took a pretty big hit today, breaking through some of these, a very important trend, and we'll talk about that in the indicators section. So just some stuff to take note. Let's hop into the sectors of the SP 500 and really kind of just look at overall performance. We're going to be looking at relative strength today. Notice communication and real estate actually did stronger today. And what's interesting is actually on one of my scans, the Party Starter scan, a real estate company showed up, and I posted it on Twitter for a potential opportunity. It's a slow mover, but I'll show you that, and then we'll get into some of the other ones. You can see it was green across the board, all right? It was green across the board except for financials, and this makes sense to me because financials, really quick, I'll go right into that. Financials have been just this monster vertical move up. So it's probably going to have to take a breath here soon. And this, I talked about this chart in a previous market brief, how this is the red zone, how when it comes up here, we typically see some horrifying things take place in the market. For example, the 2008 financial crisis. Then we had this 2018 when they tried to, taper, but that failed. And then they, boop, down to the downside. And then we had the February crash here too. And now we're moving back into that zone and we're taking a little bit of a breath. But the difference between all these times and then right here is that rates are compressed down to zero. And we're seeing the curve starting to steepen quite aggressively. So it's going to be interesting to see how that plays out. But like I said, real estate was kind of interesting because real estate's really getting beaten up from a relative performance, which we'll get into that graph. But PLYN, this is actually a REIT. And, it's not the craziest, fastest mover. But what I noticed was, and why it alerted me, was the amount of volume that came in. You can see, it's not a crazy amount, but relative to what it typically trades at, it is a lot. And we're in this ascending triangle. So, if you wanted to get some exposure to a REIT, maybe this might be breaking out to the upside so you can buy it out on a breakout and just have a stop loss below. I bought into this at, I think it was 14.35, and I'm having a tight stop loss to the point where if I get stopped out, I lose $50. So it's nothing crazy, but I just like seeing this all of a sudden big uptick of volume. The price action looks good. So I'll speculate that it can break out. If I'm wrong, I'm wrong, but so far, it looks decent to me. Now, from a relative performance, this is what this is. It's looking at a visual representation of the sectors in the S&P 500 and how they're kind of positioning. And if you look at the four corners, you see improving, leading, weakening, and lagging. So you get to see what sector is kind of moving around. And it might be hard to read, but I'll kind of give you the gist here. Financials is leading the way along with energy. XLE. So this is one of the reasons why I was talking about when energy had a down day on Friday, a pretty significant one. It was the worst performer. I said, I think that this dip would get bought. And looking at relative performance tells me why. Is because it's a leading and you have a lot of eyes on this type of stuff looking at relative performance. So when you get pullbacks in a leading category, it could represent a buying opportunity. And just like financials, it might be taking a breath right here or consolidating, but you can look for opportunities within this sector for individual stocks. Now, when I zoom in, well, I'm not zooming in, but when I hone in on a couple other areas, I want to focus on XLB and XLI over here. You can see that they've been kind of stuck within this 7-day trading pattern, really no tail to them, so they're not making an aggressive move. So I'm just going to be keeping an eye on those, but those are in the weakening sector. I do see XLY right here kind of curving up, so that could be an interesting sector to start taking a look at. But another thing that I want to call out is these long tails, you can just move into weakening here. So we have real estate, which, I just showed you a real estate stock. So be careful with that because it is from a relative performance lagging significantly, right, versus the other sectors. And that doesn't mean that the stock can't go up, but what that means is you'll probably find better performing stocks in leading sectors or improving sectors, okay? So down here, you have utilities and then the XLP as well. So utilities is quite interesting. I show you this chart. This is looking at the rate of change between utilities and the SPY. And this right here is the ratio. So when it goes up, that means utilities are performing well. And when utilities perform pretty well, they're defensive. So it's really a risk-off type play. And as you can see here for a few weeks now, we've been, and this is a weekly time frame, we've been just basing out kind of sideways to slightly down. Last week, we triggered a risk-off environment. However, it was a very low reading, and now it's already back to risk on. So it depends on where this week closed. We still have time, but it's something to really kind of keep an eye on. The relative strength on this ratio is actually showing a positive divergence right now, and I've shown this many times with like the bottoming in October with energy, and it played out very well. So we got to monitor this because if we start seeing more momentum into utilities in the weeks to come, that could signal that, hey, people are going on the defense here versus anything, okay? If we zoom in a little bit here on the utilities portion, I got to point out, this is the ratio, but right here is where we're going to focus our attention to. Notice these candles kind of forming here, these lower wicks on like these hammer candles. Well, it shows to me that bears really stepped into around this low, 60, 61 range, and then the bulls kind of stepped up. The relative strength here is above 50 and trending up, which is good. So I'm kind of thinking that, I know of people that are short utilities, and it makes sense because from a relative performance, they haven't been performing too well. So if you want to get exposure to shorts, I get it. But what I'm looking for is where they could potentially cover, because when they cover, that means there's going to be forced buying activity. All right. And then when they cover, you typically see momentum buyers step in too, which could kind of create a flurry of buying or a flurry of risk off environment. So I'm looking at around 64 to 65, this kind of zone right in here, because I think that if we start getting above these weeks right over here, that could signal some strength coming in utilities, and we're very close to that range. And if that actually takes place, then we might start seeing this relative performance ratio start to uptick. And that could cause, a lot of eyeballs to kind of pay close attention to it. So I'm going to be keeping a close eye on this, but as of right now, we still need to crack above that $64 to $65 range in utilities to maybe see more momentum and more coverage or covering take place for any shorts that are out there. Now, if they're aggressive shorts, they can have stop losses even higher, above 68, which is this high and then this high over here, and they could be playing it as a double top. So that's something to also consider. Now, materials is interesting because materials overall performance, I'm a fan of this sector, specifically around silver mining and gold mining, which I'll plan on making a video here. I should be dropping on the 26th, where I'm going to talk about silver miners and just some stuff around that. But what I got going on here is you can see it's kind of just in this up channel taking place, and it's above this moving average, the 20-period weekly moving average. So it's currently in an uptrend. However, there's still some potential short-term downside to materials. You can tell that by the candle that formed right here. It's a gravestone doji type candle. It didn't get any confirmation as of yet, but if it does, that could signal that we might head a little bit lower, potentially down to around 70. We did have a nice solid breakout. I pointed that out on my Twitter as an ascending triangle. We broke out. Now we're taking a little bit of a breath. But we're taking a little bit of a breath with strong relative strength. So it's something to very well keep a close eye on. And another part of materials today, the top performers were around the gold and gold mining stocks. And you could see that across the board. But, that could be a short-term bounce. It could be a change in momentum. We'll talk more about that in the commodities section. That chart I've already went over. Now let's hop into the indices section, where I'm going to go over the SP 500, Russell 2000, Dow Jones, Nasdaq 100 for today. Now I'm going to start on the daily, then I'm going to work my way to the 30-minute. look at, we kind of said yesterday that, hey, if we broke above this, we can see some more momentum buying, and you'd probably just shoot it up to around 4,000 would be the next psychological target. Now, we broke out. I thought it was going to chop back a little bit more and forth, but maybe this inauguration day kind of just, more hype around it, and we pushed above that level. So right now, we're going to be looking at this blue line for an area of resistance, which we'll zoom in here in just a moment on the 30-minute time frame. And then we can also watch the 20 period, which has been acting as a strong support. And then we still have this lower trend line right here, which can be drawn a couple of ways. It can literally be drawn at a higher angle, where it'd be right by the 20 period moving average. So there's a lot of still solid support, and we're starting to see a breakout of a period of consolidation. And when you get these breakouts of consolidation, we've had some pretty significant moves. So it's going to be interesting to pay close attention to the stocks in the S&P 500. You can see the bullish crossover here as well taking place on the PPO, which is the price percent oscillator. On the 30-minute time frame, it looks like it's due to take a little bit of a breath here. This is very, very frothy. You can see, once again, the overnight market. What happened? We've been saying this, right? The cash market, which is all the candles that you see, they've been using this area as a resistance. But what's crazy to me that's been taking place is in the cash market, they can't break these supports or resistances. So the overnight market gaps above it and then pushes it higher when the session opens up. So we instantly gapped above this area of resistance, which then turns it into an area of support, which is a buy signal. If you trade that way, I do. So that would have been a buy signal. I didn't place any trades today other than just one. So I kept it pretty calm today. And boom, it just moved all the way pretty much up the entire day. So gap and ramp, and that was it. However, you look at the RSI on the 30-minute time frame, it could probably, it's due for a little bit of a pullback or a little bit of a breath here. If it doesn't take a breath, then it'd be a little bit more concerning, because if we get this monster gap up again and it reads up even more frothy, that could represent something that I said yesterday about the IWM, the Russell 2000, where it'd be a good selling opportunity where you sell into that strength as a hedge position. So if we get rollback tomorrow, this gap can be a big area of support. And then we also have, obviously, right here, that was previous resistance, resistance, resistance. Now it's going to be support. And that's right around 381.50 on the SPY. All right, let's get into the Russell 2000 now. Russell 2000, look, I have not been an advocate of going long the Russell 2000 in these overextended territories, mainly because we haven't been getting areas of consolidation. Now, like I said, the last couple of market briefs, if you go long, your risk is higher to go long than it is to technically go short at these levels because of the overextensions. And not to say that it means it's going to be pulling over, but we said yesterday on the 30-minute time frame, we drew out this kind of rising wedge, and we said if we get this gap up, you can sell into that strength. And what we saw here was an all-time high, right? We gapped up, moved to an all-time high, but it was a failed breakout of the previous high. You can see that because as soon as it came up to these overextended levels, you can see the RSI got overbought. It then got sold into for the remainder of the day, and it kind of curved out towards the end. Now we broke through this rising wedge, but we also broke through it here. So maybe we can monitor this trend line going into tomorrow. But overall context still, we have 50 period sloping up, 200 sloping up. So, it's a strong bullish trend so far. You just know that, when we get these monster gap ups and pushes to all-time highs and the RSI is very overbought, it's a cause for concern, and it's not a typical place that you really want to get long on. And if you do, you want to make sure that you manage your stops very closely. So here's the Dow Jones. Let's get into that daily and 30-minute time frame. We are still consolidating here. Okay, the price percent oscillator is kind of going sideways. Maybe we get a bullish crossover. Maybe we get a breakout tomorrow. It's possible, or we're going to consolidate a little bit more back and forth. But look for a breakout, and then if we do start breaking out of 31,250, we might start getting higher moves to the upside as well. Now, on the 30-minute time frame for the DIA, which is the ETF, you can see a rising wedge pattern here. And the last 30-minute candle was a gravestone doji candle, so it's a pretty bearish-looking candle. And you can see that, obviously, it reached its all-time high, closed a little bit lower, right? And it closed below this area of resistance. We had one hit and two hit, and then it started to curl around. So this is still an area of resistance, 312 to the high of today, which is 312.34. So if we start breaking above that, and we don't get confirmation to the upside, we can head higher. If we start breaking below that, I'd start targeting the 50 period in this first gap right down here around 310 to 309.50 as an area of support. And notice how the price action stays up here above the 200, you're going to see the 200 continue to slope up as well, which also acts as an area of support. Now let's get into the Nasdaq 100. Nasdaq 100, just a monster gap up today. Huge move for the 100. It's absolutely bonkers. You could technically draw this out a little bit differently, this channel, and you could say that it broke out to the upside. Now this is a very, very frothy move, and you could see the price percent oscillator kind of crossing over. So this might be trending down, but we might now start to see this break out. Let's zoom in on the 30-minute time frame here because we're just kind of at this wall of resistance. So it's going to be interesting to see how this one plays tomorrow. But just look at how frothy the RSI is here on the Nasdaq 100. It's due to take some sort of a breath. And what's interesting here, once again, the market gap, like look at how big this gap is. Just huge rocket ship gap. And it gapped over the previous gap, that gap down. Isn't that crazy? So look at this. This was that high over here. And then we gapped down that morning and we couldn't make it above it. We were putting in lower high, and lower high. So the cash market couldn't get above it. The overnight market, the futures market, gapped over this all-time high. And then the cash market bought all into that momentum. And then you see a little bit of a sell-off after night. This is all very concerning, by the way. This is very concerning because it's like the same script over and over again. So first off, the cash markets, the retail traders and stuff can't break these certain levels. And it's almost like the futures market then steps in, gaps over these levels to bring in more buyers during the cash market session. And then eventually, once they're out of their positions or once they sell into this strength that they see the next day, it's very possible that you're left holding the bag when you see some sort of a pullback. So be very careful and be very aware of these gaps that are taking place in the overnight sessions, especially when they're so algorithmically driven. Like this, look at this gap up. It gapped literally and back tested this high perfectly, darn near perfectly. Just poof, and then cash market's like buy, pin, higher, and then we see a little bit of a breath here. So if we get a huge gap up tomorrow, I would be considering to sell into that strength just because the RSI would be even more overextended, and it would be a good risk versus reward trade from a short perspective. And if we start getting pulled back, it's going to be this zone right here, which would be an area of support. We have two gaps: the gap up today, and then this gap up that never got filled. So just crazy, it's bonkers price action to say the least. Now. Also, let's get into indicators. For first look at the NIMO. This is the NYSE McClellan oscillator. It's a good breadth indicator. I like looking at this. Look at the SP500 moving up, but we're doing so on pretty weak breadth still, right? This is the same script that we saw in December 19 to February 2020. Same script, negative divergence. Doesn't mean that script's going to play out and we still have room for breadth to break through this and get a big burst. But as of right now, it's weak. It's weak moves. And then another thing that I want to call out is the NOL, the new high, new low. This is also a very similar script to 2020, early 2020, January to February. Negative divergence on the NOL, the new high, new low index. Okay, you see the high here. You see the price action here. It's low on the comp Q, and then you see a lower reading with a higher high, negative divergence. Okay, right here, just an insane reading. Okay, one of the highest that I've seen, even looking back in the chart. And then you have a lower high right now as the stock market is making another all-time high. So I'm not saying that has been confirmed or anything, and this will all make sense in hindsight if it does fall. But what's important to know is you might be feeling very euphoric in these times as we're seeing our 401ks or our investment portfolios start to just skyrocket. And you start to think like, oh, dude, I got this. Like, I cracked the code. All I have to do is, blindfold myself and throw a dart and hit bullseye. That's really what it is. It's not hard to make money in this environment by any means because all you have to do is buy a stock and it goes up. But that's not always the case. And you got to understand the psychology behind that, what happens to the regular human, and the stock market is made up of I mean, also robots, algorithms, and all that stuff, but a lot of retail traders and a lot of humans. Okay. And what they do is you build confidence. And too much confidence leads to competency. How did I say? Did I say that word? Competency? Competency? Yeah. You know what I'm trying to say. Okay. Too much confidence or overconfidence can make you kind of get lost in this euphoric moment and not realize, as we've seen, the potential risks around a corner. And to say that, it's never going to happen, we're never going to see a correction again, that's bonkers to even think or even say. I don't know when it would happen or when it can happen. And most of the signals now, again, are risk on. So it means, push it to the limit apparently, but be careful because you don't want to lose your money. And this, like I was saying, the psychology behind everything, it's very interesting. You have people, make a couple wins and they're like, well, man, if I put in just a little bit more, make it a little bit bigger of a trade, I can make even bigger wins. And then they do, and they're successful. Like imagine those people from November. Boom, I'm super successful. Boom, I'm super successful. Boom, I'm super, you know what? I'm just going to go even bigger because it's working too good. So that's when I say a lot of the times, you can get 9 out of 10 trades right, but that one trade that you lose could wipe your entire gains out for months and months and months. Or wipe your account out because of overconfidence, right? So it's something to keep in mind. I'm kind of rambling on. Now, let's take a look at the VIX. This is the fear index. The volatility index goes good with the S&P 500. When you see this, spike down or go down, you see the markets go up higher. And we had a big down day, 7.14%. And we cracked this little trend line right here. Doesn't mean that it's going to just, not go back up, but it's something to consider. And I have this little pink box down here because that would be a good target to potentially take profits on your longs, because I feel like if we hit down into this range, at least for the short term from 20 to 21, this would be a range where you might start seeing the VIX kind of uptick, which can pull stocks down in the S&P 500 down. Now, if we start breaking through that nice and easy and we start drifting lower, maybe we got to start looking at this gap to get filled, which has been bugging me for, an entire year now. So we'll see how that takes place. We're still in this channel, so, heading lower still. And we have, like I said, this area of support, which is the lower Bollinger Band, and it's the previous support around these ranges too. So something to consider, so if you're in it, so let me kind of just paint out the better scenario for you. If you are in any stocks within the S&P 500 or you're trading, bigger amounts, when you see the VIX from a daily time frame, or if you hone in on a smaller time frame, come down to this 20-21 range or spike down there quickly, that's when I would say, okay, now we could potentially see it bounce back from the bounce up a little bit. So you want to make sure that you're kind of keeping a close eye on it, because if we do start seeing the VIX bounce, you'll probably start seeing various stocks within the broad market sector, broad market index like the S&P 500 start to moving lower. Here's the Pring bottom fisher. I don't really show this too often because I like it for really just finding market bottoms, but I keep kind of finding some just interesting things. I reposition these blue boxes if you watch my show, but this is now looking at times that it crossed over, which is doesn't mean that's not how I use this signal, but when it crosses above, like the blue crosses above the green, like down here, it's good at finding market bottoms. Boom right here, and you see it move up. Boom right here, you see it move up. But I point out these two little vertical lines because when it crossed over, notice how the market kind of squeezed up higher and then corrected. When it crossed down through this way, which is bearish, we saw the continuation of this squeeze, which we were talking about. When it crossed up, we saw the squeeze, but also when it crossed back below, we saw a continuation of the squeeze. And then we saw the spread head lower, which is going into the winter season. And you could see that finally it kind of curled over. You can see the same thing here. It crossed over, moved up a little bit higher, and then eventually came back down to test that same level. So what we're seeing here is interesting because it's very similar script as well. We crossed over, which is, bearish going into that winter season. And if you look up, we're starting to squeeze higher. So maybe we continue to squeeze higher, but what this tells me is if we play the same script, we can squeeze higher, but if this continues to head lower, this can correct its entire move just by looking at the previous history. So keep that in your back pocket, okay? Don't say I didn't tell you, but it's something to, take note of. Let's get into commodities, because commodities played out quite well. Gold with a $26 up day, 1.43%. We pretty much jammed and closed at the 50-period moving average and the 50% retracement level. I like a couple of things here. One, I like how it broke through some of these previous candles, so that's a good sign. What I don't like is, one, it's still swimming up a river, right? We have lower lows and lower highs. I mean, if you judge from right here, I guess that's a higher low, which is a good thing, but we still have a lower high. So it's still trending down and it's swimming up a river. You know, we're bouncing from this 200-period moving average, which is like that safety zone. It's the Godfather moving average. And, you know, we're kind of just pinned between the 50 and the 200. So it's going to be interesting to see how this one plays out. But like I said, it has a lot of work to do. And it's going up against the dollar that has been kind of, you know, kind of breaking out a little bit. And so you can see the move down. And we also were going up against yields spiking. Now, silver, on the other hand, silver doesn't look as weak. It still can be called a bear flag for the most part, but we are breaking out of these previous candles very similarly, but we're above the 50% retracement. We're kind of jammed up at the 38.2 retracement level, but we are above the 50 period and we're well above the 200, and they're both sloping up. So to me right now, silver looks better, just from a technical perspective. Now, we're still struggling to make another high, so it's putting in lower low, lower low, lower low. So we need to see that trend kind of break for more momentum and maybe more buyers to step in. But as of right now, you know, this right here can be a Morningstar candle pattern, but it's in, you know, a bearish, short-term bearish trend. So it's a big red day. We'll see if we can break above that and get higher. Very interesting price action overall today. So up 7.6%, which was nice. Bitcoin still within the symmetrical triangle that we talked about yesterday. All right, and we're seeing a little bit of, you know, down coming back into this trend line, but we're getting bought back up around this 35,000 range, coiling tightly. The only kind of concern I have is the MACD is just getting more and more bearish trend. So you're seeing the histogram kind of go higher, or lower, I should say, and then this spread is getting wider and pointing farther down. Now, that doesn't necessarily mean anything. This could very well, if it breaks to the downside, it could be a bear trap where people start selling off, but then all of a sudden it traps the bears and then we start moving higher. So that's something to consider as well. If we start breaking out, hey, we can go retest 42,000. And if we start breaking above that, hey, go head higher. The RSI is still above 50, so that's good, but we're kind of sloping down there as well. So it's going to be interesting to see kind of how this one plays out. I wouldn't be buying at this level right here just because it has the possibility of breaking down. I would say consider buying on a breakout of about 40,000 or even 38,000, because that would show us some more strength coming in and breaking past this previously high, which, you know, higher lows would then be, hey, we're starting to now actually change that short-term trend. If it starts breaking down, then you want to start looking at the 50-period moving average and even potentially way down here at around 20,000, because it could definitely reach down there if we take a big spill. We've seen it before, right? Now let's get into the dollar. Very short on the dollar, falling wedge, right? We've been tracking that and we broke out. Is this a short-term bounce? It might be. Okay, we don't know yet. It's above the 20 period, so that's some strength, short-term strength, and it's still below the 50, and the 50 sloping down, and the 200. All right, so we started getting this breakout, and then perfect on timing. On the weekly time frame, I should say, it was about to break out, and right on cue, Janet Yellen comes out and talks, and then we start to see a little bit of weakness. So, just seems to me like, we might get some sort of black swan event where there's a flight to safety, flight to dollars, but the long-term view is that the dollar is heading lower. That's my long-term view. I don't know, I can't put time frames to all of this, but what I can say is, 10 years, 5 years, I would imagine the dollar to be lower given the current state of the Federal Reserve, the current state in the economy, politics. It just seems to me like, the only way we can kind of keep this facade going is by, more money, more liquidity, and a cheaper dollar, which is good for silver, which is good for gold, which might be good for Bitcoin and Ethereum. I see some correlations, but I'm not I don't know too much about that. But then also various commodities. I mean, I'm even considered looking into farmland. Okay, me, Farmer Michael. Yeah, believe it. No, I wouldn't own the land, but I would invest in some of the land. I'll keep you guys posted on that if I do. It'd be a small amount, by the way, nothing crazy. But I am interested in agriculture, farmland. I'm interested in commodities, not just a stock market, not just stocks. Because stocks, when you really think about it, I'm going to just get into the conclusion. When you really think about everything right now, if you are just in equities, that means you're in really one asset class. Now, you could say you're diversified because I have, a REIT or what else? Technology stocks. And then I also have consumer discretionary. You can say that you're diversified, but when you scope out to the bigger picture, that's not really diversification because it's still an equity. It's still a stock. So you got to understand, if you want to really be diversified, you need, physical metal of gold or silver. Those are commodities, not just the paper equity. All right. Or a physical fund like PHYS would be another one. So that would be diversified. I have gold, I have silver, real estate, a physical house or, a rental property, that's diversified. You can have equities, you can have treasuries, you can have, array of things, but, it doesn't need to just be equities. So that's just kind of my 2 cents on that. But the overall kind of view on the market as of right now, we're seeing some strong momentum. We're seeing some strong breakouts, but we are seeing some just extreme overextensions. All right. So until that changes, you need to be on your toes, unfortunately. Okay. And it might suck hearing that, but you need to be on your toes in this environment. We are due for a correction. We have record, market caps in these crazy stocks, or record valuations in these companies. Some companies that don't even make profits, but yet they're extremely valuable. All right. And I'm not going to sit here and justify why it can, why it is, and why it's not, or whatever the case is for all these companies. What I got to point out is, history doesn't always repeat. Sometimes rhymes. It's been getting very popular saying here as of recently in the FinTwit community by Mark Twain, I believe it is. But things, gravity is real in the market. Stairs up, elevator down. And if the market's heading vertical right now, that technically still is a staircase. So when the elevator hits down, it can be very abrupt. Heck, it can happen overnight. We've been seeing gap ups. Remember February? It's like people forgot about February, right? Where we were getting circuit breakers triggered, 3 or 4 times. And we were getting these pretty huge aggressive gap downs. So you'd wake up and your, put or call options would get hammered. So this inertia, this euphoric behavior, this, just straight up gambling within the OTC markets, the penny markets, or I don't know if you know this. I wish I had a chart, but I don't. But the OTC markets saw like 1 trillion in volume, which is not like the highest ever. Like, tell me that's not gambling. Okay, most people don't know how. Like, I just don't believe that to be like legit stuff, because a lot of these OTC markets, like, there's some solid, strong companies within it. I'm not saying that they're not, but a lot of them are these, 0.0001 cent companies that can get completely obliterated, but we're seeing them trade at $1, or, you have the mentality on a lot of retail traders like, well, if I buy it at, 5 cents, it might go to, $1. And if I buy this amount of shares, it'll make me a millionaire. So you get a lot of that stuff. And trust me, a lot of people are probably making a lot of money right now doing that, because there's just been some crazy, crazy momentum. But it's the same script we've seen before. It's the same thing. You get these crazy moves to the upside, and people start to really, truly believe to their core that the market can't fall and they can't lose money. Like, people actually believe that, which is crazy to me, because you can lose money and you can lose it fast. So be very careful. I've been rambling on. Hope everyone's having a good start to the week. What is today? Today's Wednesday. Good middle of the week, I guess I should say. It's Tuesday. Having Monday off really messed with my head. I'll tell you what. All right, guys, that's all I got for you today. Have a good day. See you later.